Welcome to today's video, and Happy New Year wherever you are. Today, we're looking at one of the most important ideas when it comes to your finances, your money, and maximizing the chance that you become wealthy. And that is the crucial difference between investing and trading. This is a topic that's incredibly poorly understood, and never more so than today, with the rise of social media, the crypto market, and far too many TikTok influencers who've actually never passed a finance exam. Before I go on, I might note that I suspect this video will generate a fair bit of controversy. There's every chance we'll get a fair bit of hate mail from people, particularly die-hard fans of trading and crypto. But I'm willing to bear that risk. As I've said before, our mission is to improve the financial affairs of as many people as possible. And in that endeavour, I firmly believe that what follows in this video is really important stuff, and all too poorly understood by millions of people, with disastrous consequences for so many. And I believe this strongly enough to tolerate the hate mail. So, in today's video, I wanted to explain the crucial difference between these two things, between investing and trading. It's really, really important to understand that difference. So as ever, if you find this video useful, please do hit the subscribe and bell buttons. And if you share our mission about the importance of this stuff for all of us, please do share our videos. So today, I want to make the case that investing is for absolutely everyone, and almost no matter how much you earn. It is something everyone should do as soon as they're able to, and even with tiny amounts of money, and should continue to do for their entire life, no matter what is going on with the news or the economy, by the way. The same cannot be said about trading. At the most basic level, the reason this is so important is quite simply because for the significant majority of people, you have a high chance of making money and becoming wealthy if you invest, and you have a high chance of losing money if you trade. This is true for most people. Failing to understand the difference between investing and trading is one of the key reasons that so many people fail with their finances. It's also the reason why so many people fall foul of scammers and con artists. To be clear, I have nothing against trading as an activity overall or philosophically. Done well and done at the right time in your life, it can be powerful and a great way of increasing your wealth. It's just really important to understand the difference between these two activities, and crucially, the fact that getting investing right should be a much higher priority than learning how to trade. Investing really should be everyone's first priority. So let's look at why this is. Firstly, investing is all about gradually building wealth over a long period of time, ideally a very long period of time. You invest whatever you can afford into something sensible every month for many years. And if you do this reasonably well over long periods of time, you have a solid chance of becoming wealthy, no matter what your income, background, or education level too. There's more than a century of evidence that this is the case. It is actually how the vast majority of millionaires became millionaires, as we looked at in one of our previous videos. And ultimately, the reason investing works is quite simply because by doing it, you give yourself financial exposure to human progress. And that is something that's very real and very tangible. Trading is something completely different. Trading involves attempting to time financial markets in some shape or form, and often over relatively short periods of time, and it requires a great deal more skill than investing. Investing is about human progress and global growth. It helps to provide capital for real businesses that are doing real things in the real economy, developing new software, trying to cure cancer, or building a factory, ship, or building, for example. Trading is much more of a zero-sum game. It is financial speculation, which, crucially, doesn't really create anything. If you win, it's generally because someone else has lost. So in the main, investing is fundamentally good for the world and for human flourishing, trading not so much. To be clear, some people can and do make a great deal of money from trading, but it's really important to understand that most people don't, and why this is. It's a well-established fact that about 70 to 80% of people lose money when trading. And the reason for this is actually quite simple, because becoming a good trader is hard and it's time-consuming. So let's look at that in more detail. First, if you're going to trade, of course, you really must learn the skills required to do it well. And I would say that the work required to become a half-decent trader and do it properly so that you have enough skill to stay safe when you do it is at least an A-level's worth of study at best. In fact, it's actually probably more like a degree's worth before you'll get properly comfortable and consistently good and have the deep understanding of financial markets and the key trading techniques you will need. And even then, there's no guarantee you will get there, even if you are willing to do that work. It's worth thinking about the fact that to be good enough, you'll need to understand the subject matter really well. If you have a poor understanding of what is certainly a complicated subject, there is, of course, a real risk that you will lose money. So just as you wouldn't want an airline pilot or a brain surgeon who had only a mediocre understanding of their subject matter, you really don't want to be a trader unless you have a very firm grasp of what you're doing. And this idea should come sharply into focus when you consider that you will be competing with some of the smartest and best resourced people in the world if you decide to start trading. Secondly, even once you've put in that initial work to learn about it at a fundamental level, the amount of time and effort required to actually do any kind of trading and succeed at it on an ongoing basis is also significant, and I would argue prohibitively so for many people, particularly busy parents, for example, or if you're just starting out in your career and you've got a ton of work and study to do. Truly, don't believe anyone who tells you it only takes 5 minutes a day. It might take them 5 minutes a day after years of practice, but that will absolutely not be true for any beginner. Not to do it properly and actually acquire sufficient skill to protect yourself from the risk of losing money. And as another general comment, if you're going to take the very real risk of losing the money that you've worked so hard to save, don't you think this is actually something that you should be spending more than 5 minutes a day on anyway? This is pretty important stuff after all. Thirdly, and this is really important and really poorly understood, unless you have significant net worth in terms of liquid assets and cash to deploy, trading is actually highly likely to be something of a waste of your time in absolute terms. So to explain that, the financial return you might make on the time you need to spend on it could be fairly small compared to lots of other things you might be doing with that time. Unless you have quite a lot of money already, and I would say ideally a chunky 5 or even 6-figure sum, you're not going to be able to deploy enough capital, crucially at a low enough risk, to make all that extra work and time spent staring at screens worthwhile in absolute terms. The best trading educators will show you that you should only ever risk a relatively small amount of your money, of your capital on each trade, and ideally not more than about 1%. So if you only have a few hundred or even a few £1,000s, then if you take that advice and trade prudently, you'll only ever be able to make relatively small amounts of money from trading in absolute terms. And if you think about this in terms of the optimal return on your time, which is by far your most valuable resource, by the way, this is quite likely to be pretty poor compared to many other things that you could be doing with that time. Say, for example, you have £10,000, and even if you have a fantastic year and make a 30 or 40% return in a year, you will have made £3,000 or £4,000 in absolute terms over the course of a year. Now, although that might sound great, for a beginner, this will likely have required many, many hours of your time to achieve. And I think it's important to think quite deeply about whether that time might have been spent better doing something else. If you'd spent those hours on getting better at your job, or even on getting a new job, might you have managed to increase your salary by a great deal more than that, for example? And for many people, this is actually possible. An increase in your skill level and or your salary also has the key advantage that you're very likely to benefit from that increase for many years to come and possibly forever after. In contrast, for many new traders, a fantastic 30 or 40% year will so often be followed by a year where you may then lose money, which is nowhere near as good an outcome as an increased salary, clearly. Put another way, the return on trading is far less reliable than the return on becoming more skilled. So without wanting to sound too boring, truly the hours you might spend trying to learn how to trade currencies or glued to crypto groups on social media would almost certainly be better spent becoming better and more valuable at your day job and getting paid more as a result. Or if you hate your day job, as so many people do, on spending the time to figure out what else you could do with your life, acquiring the skills to do that and making that move. And I think this is a really important point to make. Far too often, people who have very little money go straight to things like crypto and currency trading and completely bypass doing the best with the far more fundamental things like savings, ISAs, and pension arrangements. And to me, this is certainly doing things in the wrong order, and a bit like someone with a white belt in karate or judo fighting a black belt on day one of their martial arts journey, i.e. very likely to result in you getting hurt. Fourthly, trading and crypto services are invariably very expensive on the basis that they promise life-changing returns. To me, there's no worse a rookie mistake than someone with, say, £3,000 of savings paying some unregulated guru £1,000 of that to learn trading. It is my firm belief, borne out by the evidence, that most people will be better off spending their time on things that earn them money and then saving and investing, not trading, 10% or more of those earnings for many years until they have much, much more than a few £1,000s. It is for these reasons that so many people fail at this. It's a completely inappropriate activity for so many people. And so many trading educators, whilst sometimes teaching entirely viable skills, certainly the best of them at least, often don't actually help people improve their finances in the real world. Simple, regular investing by direct debit into a fund or funds that are sensible is a vastly better idea, certainly for the first few years of your journey. To be clear, I'm categorically not saying that all trading is bad, or that everyone working in trading is unethical or somehow dodgy. If you have the time and the money and are ready to do a great deal of work, then learning how to trade is something to consider and can be very powerful. I'm just saying this is only something you should do after you have put the more fundamental financial building blocks in place and after you have built up enough of a capital base to make it all worthwhile. And of course, only if you're willing to commit a great deal of time and effort to it. Sadly, far too many people are trading when they really would be far better off investing. And if this sounds horribly boring, it's probably worth bearing in mind that the best investors and the most successful people think in terms of decades, not months or years. On the road to becoming wealthy, if you want to maximize the probability that you succeed, two of your greatest allies are time and patience. So when you then become sufficiently wealthy, let's say in your 30s, 40s, or 50s realistically, depending on how early you start with investment and how much you earn, that is the time that you might then deploy some, and crucially not all, of that wealth into trading strategies, single stock investment, or crypto. For most people, perhaps the best time to become a trader is once you've actually retired, because if you have a fair bit of money, a decent amount of time on your hands, and an interest in financial markets, trading could be a great activity for you. But for much of the rest of the population, it really isn't. And this is one of the other great tragedies of so many people not understanding the difference between investing and trading, is the fact that so many people try trading, lose money, and then give up on investment because they fail to understand that these are two completely different things. I've seen this time and time again in 25 years of being involved with financial markets. The simple fact is that most people will be far better served by investing, not trading. And in our next few videos, we'll expand on these ideas in more detail. If you found this video useful, and if you agree that this stuff is really important for so many of us, please do hit the subscribe and bell buttons and share this information with anyone who you think might find it beneficial. Until next time, as ever, I wish you the very best.